coming into COVID, we sort of had a bit of a look through to what it meant from the perspective of turning our gaze up to Asia and having a look at what the information was showing us out of the epicenter of the virus. And it was basically lockdown, but with some leakage. And here we are months down the track, and the first ones in, being in China and other parts of Asia in particular, are now out of the pandemic's throes in a large way. And the lockdown restrictions have eased quite substantially in that Chinese market in particular, but then, you know, flowing through to a market like Japan, where basically the REITs were really not too affected fundamentally in terms of valuations and rental and occupancy, with some slight declines, and of course Singapore, which is now seeing the back of those draconian type lockdown restrictions. And you turn your focus through to markets like Europe and the US, where it was a little bit of a powder keg moment for a lot of those, where it was rampant in markets like Italy, of course France and Spain in particular, and over to the US as well, where the spread was, you know, parabolic. And the opportunities have really followed that sort of that pathway through markets. In the listed side, we're fortunate where we get to make decisions and implement them immediately, and markets moved really quickly, and we were able to sort of position ourselves to have a look to which sectors and in which markets were most likely to be able to build that bridge through the draconian lockdown measures and still being able to maintain the utilisation of their tenant base. And those tenants were still able to pay rent and pay through a distribution to our income-focused investors. So it's a long-winded way of saying that it's been a bit different across markets, but the opportunities have been similar across them, just at different times. And now, for example, the last week or two in Australia, as all states have got lockdown restrictions easing, most notably Victoria most recently, we're starting to see more activity in the retail and consumer goods space, where there's a lot more foot traffic, a lot more activity through our retail malls in particular, and investors, and in particular those with a look through the short to medium term, can see some way out of this malaise for those types of landlords in particular. But as real estate investors, it's really basically important to have a look at which sectors are able to be the most resilient and which locations. When it comes to locations, probably agnostic in the fact that there are certain sectors across all geographies which will still maintain their level of utilisation and activity of the underlying tenants. And one of those in particular is in the convenience-based retail space, non-discretionary grocery anchored type retail. So for investors, think supermarket anchored retail, where there's a high level of not only the ability to go in-store to transact, there's also the COVID overlay of higher sales. People aren't going out to dinner in the restaurants. People aren't working more so to move outside and eat out of home. They basically have to increase their grocery spend and spend that at home themselves. They're also looking to online grocery and delivery as well. So there's a number of REITs, in particular one in the UK, which is 100% leased to the major grocery anchored retailers there in that market. And it was indeed one of the only REITs globally that was able to collect 100% of its rent through the COVID period. Now, this REIT owns a portfolio of retail assets across the UK that are fully leased to the likes of Sainsbury's and Tesco's. And while they have increased their sales in-store, the volume of internet and online sales has basically gone through the roof. Now, the kicker for that is that given their network of their assets, they're able to fulfill those orders from the actual stores themselves. So given online retail, it hasn't made these physical retail spaces redundant in any way. If anything, it's added to their appeal and importance for these groups, given their proximity to catchments and make no mistake, it's a difficult and costly exercise to deliver goods and fulfill goods and move them in an area of retail where margins are skinny and competition is high.